energy rebates, so that is subsidizing energy bills, so that reduces the bill and lowers the measured rate of inflation today because it lowers prices. Then when the bill comes off, obviously prices jump back up again. And so what you're effectively doing is moving the inflation forward in time. So the RBA says that, yes, the energy rebate will lower the inflation rate today, but then it'll raise the inflation rate a lot next year when those rebates come off. The second thing this does, though, is by giving you a rebate on your electricity bill, there's more money in your pocket. And so while the RBA is trying to pull money out of people's pockets with higher interest rates, the rebates are putting money back in. So that raises inflation, more demand in the economy, more inflation, higher interest rates in that way. The other thing that governments are doing is beyond energy rebates. There's a lot of government spending going on in the economy. So in the federal budget alone, there's roughly 20 billion of new spending in the coming financial year. The deficit is 20 billion larger. That crowds out private spending. That pushes up inflation by increasing the level of activity in the economy, and the RBA has to offset that with higher rates.
Why would the government be comfortable with designing a cost of living relief policy that reduces inflation in the near term but prolongs inflationary pressures for Australians in the longer term?
Yeah, there's two reasons. The inflation rate goes down now before the next federal election, but it goes up after the next federal election. I don't want to be too cynical, but you can't ignore the role of politics here. The second thing I think is legitimate, which is in the earlier energy bill relief, it was targeted towards those most in need. So the idea was we wanted to shield the most vulnerable from the worst effects of inflation. And that's a perfectly legitimate thing to do. It means that others will have to pay more in higher interest rates, right, and higher in inflation. But that's the government's prerogative. I think the more recent measures, though, by broadening out the relief to all households, it's a lot harder to justify because the inflationary effect is just going to be higher.
And so in the longer term, would Australians be better off without these kinds of supports? Even though it might be more painful initially, would inflation come down more quickly?
Yeah, that's exactly right. I think the way people need to think about it is the Reserve Bank has its foot on the brake and the government has its foot on the accelerator. And if the government keeps pushing harder on the accelerator, the RBA needs to keep pushing harder on the brake. And if you keep pushing harder and harder and harder, the risk you run is that the engine blows up or the brakes burn out, right? And I think that's the risk, is by pushing all of this stimulus into the economy, forcing the RBA's hand, we risk a kind of high interest rate driven recession, for example, that if everyone had just taken it easy, we could have avoided. So that's kind of the eventuality that I'm most worried about.
So will this influence the RBA's decision-making on rates? And if so, does it mean the next move is more likely to be up than down?
So the RBA last week came out with new forecasts and new guidance. And so it said two key things. One is inflation is higher and more persistent than they expected. It's coming down much slower than they expected. That the gap between demand and supply is much bigger than expected. So basically their task is harder, which means interest rates higher for longer, and they've indicated they won't go down for at least 6 months. The second thing they said is a big contributing factor to this is what they call higher public demand, which is the government out there in the economy buying goods and services, giving household cash. That's causing some of this delay to the reduction in interest rates. Now, the RBA is waiting to see what happens. If inflation continues to go sideways as it has for the last 6 months, I have no doubt the RBA will raise rates, and they've indicated that they will. But I think at the best case scenario is that rates are going to be at least on hold for a long time. So any relief is going to be delayed until, I would suggest, well into next year.
The RBA has left the cash rate at 4.35% for 9 months. Are there reasons why holding firm helps or hinders the effort to get inflation under control?
Yeah, so they last raised rates in November last year. And I will say since December last year, the monthly inflation rate has not moved. Every single month since December, inflation has been around 4%. And so I would look at that. If I was on the RBA board, I would think, well, we last acted in November, and since then, inflation hasn't moved. We probably need to go further. Now, I think that's in the brains of a lot of the RBA board members in the RBA staff. And what they're doing at the moment is they're just waiting to see. They're hoping, fingers crossed, that inflation rate will start to tick down. But eventually, if it doesn't, I think there's no doubt they're going to have to go further.
Did the RBA make a mistake yesterday?
Look, if it were me, I would have raised rates. It's hard for people to hear that, but I think the risk we run is if we delay this pain, the pain that comes later could be worse, right? If you let inflation become embedded in the economy, right? And inflation has been elevated for years now, right? It's since April 2022. That's more than 2 years ago. And the RBA is forecasting our inflation will remain elevated for at least another 3 years, right? So that will be 5 years of inflation well above target. That's very risky. If inflation becomes embedded well above target, it becomes really hard to get it down. And so you have to ask yourself, what is the RBA going to have to do if inflation becomes embedded? And it runs the risk of having to raise interest rates a lot in order to get inflation down, which again, could raise the risk of a recession. I think that's the biggest risk.
Stephen Hamilton, good to speak to you.
Pleasure.